Folks, so we have a Fed decision on Wednesday, and I like to talk to people that are smarter and more experienced than I am. So, of course, I go to Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Hang on one second. Jay Powell. Yeah.
There you go.
25. Got it. There you
Ah,
go. Right off the presses, 25 basis points. We were talking about it this morning, and labor's still too high. Inflation is still labor's too tight. Inflation's too high. And they came out yesterday in a joint statement, first time ever, Powell and Yellen saying the economy's fine, the banks are fine, everything's fine. So what he has now is ammunition to keep hiking because they've managed to put a backstop up for the banks and create any systemic risk in the financial markets and the banks. The markets are rallying on all this because they perceived all that with the SVB bailout, backstop. Everybody's calling it a bailout as a pivot. They're calling it QE. They're calling it a pivot, even though it's not. And it's not even close. It's the exact opposite, potentially. That's how the markets are kind of playing it. Right. And sucking retail into that narrative. And, so they've got all the, ammunition they need to hike, and they need to keep hiking because the economy, the labor market's still too hot. Inflation is still too high. The economy is still running well. And, people really aren't blinking at all this stuff. They might move their money to another bank, but they're not, they're still going out and doing what they're doing.
Yeah. So again, I think we both agree. I said over and over 25 basis points. I mean, I've been asked, and I said I'm 99% sure it's a quarter. Right. I actually,
it was, the narrative was 50 basis points before the SVB.
Like 2 weeks ago, right?
SVB situation. Yeah. So now it's 25.
Yeah. I actually have a question. I've told somebody that if they do zero, the stock market's not going to like that because it's a signal, right? Just based on Sunday, everything is good. And then on Wednesday, if they do zero, that's probably a bad signal. What do you think?
Yeah, I think so. I don't think the markets will interpret that, as a good sign. And I think the credibility of the Fed, it's already gone, but it'll just be even worse because they have an inflation problem. And they've, labor markets, all the things we said, they haven't really done anything. And what, all of the people that are under pressure and have an agenda are screaming, don't hike, don't hike.
Yeah, Kathy Wood. Cut.
Because they're under pressure because of the bets they've made. It's got nothing to do with the average consumer out there that's under the most pressure. That's, they're just going to work every day and trying to make, things work on a paycheck. And their paycheck is less valuable and can buy less every single week.
Yeah, it's terrible.
And again, I'm going to ask you, just like anybody else watching this, have you seen prices come down on anything in your world?
No.
Not one. Have you seen prices continue to go up on everything in your world? Absolutely. So until that problem is fixed or something systemically breaks, this little thing's maybe a little crack, but it's not broken. Broken is the market's down 50%. Banks that matter are failing. And, nothing is broken yet that would cause the Fed to pivot and stop what they're doing. And, much less, start juicing the economy like a lot of people are saying. And especially one narrative out there, I don't know if you've seen it, where the guy's calling for $1 million Bitcoin in 90 days.
I saw that. He's making $1 million Bitcoin in 100 days, 90 days, something
90,
like that.
90 days.
90 days. The
and hyperinflation, the economy collapsing, but yet Bitcoin's going to go to $1 million.
Yeah, I saw that on Twitter yesterday. Last
this in
night.
90 days. So you got 90 days.
Well, let me ask you this question again. Let's just assume he's right, which I clearly do not. But let's assume we're on the cusp of hyperinflation. What do you do today? Just play it out. What do you do?
From a hyperinflationary standpoint, that's where, what becomes the most valuable asset in that kind of environment. Because, if everything gets hyperinflated, then your dollar's worth nothing. Even if you have Bitcoin at $1 million, you can only buy so much and everything's going up exponentially. So let's just get rid of all currency and let's make Bitcoin the currency, or gold, or whatever. And if it exponentially goes to $1 million, gold goes to $1 million an ounce, Bitcoin goes to $1 million a coin, well, everything else is going to hyperinflate with it. So it's all relative. So at that point, you would have no choice but to, opt into those systems. So then it kind of balances out. But in extreme circumstances like that, that's where your knowledge and your skills are more valuable than your currency, because then you take advantage of opportunities and insert yourself in deals that way. But
yeah, I mean, this is what I would do, because again, there's a lot of people saying hyperinflation is here. Most people aren't saying it's coming in 100 days or 90 days. But if you play it out, I'm like, if Mike Zuber believed hyperinflation was coming, I would take all of my money, buy as much real estate as I could on 30-year fixed rate debt, and I would just let inflation make me rich. My balance sheet would go up and my income statement because my debt is fixed into a floating environment. What do you think of that idea?
Well, so if it's hyperinflation, then nobody's going to be able to afford to pay rent. So
Well,
that doesn't work.
Yeah. Okay.
You know what I'm saying? So, the scenario is, from that narrative, you got to get into Bitcoin because nothing else is worth anything else, and your money's not going to be worth anything. So hyperinflation, if I can't pay for it, how is that even going to work?
Yeah. Okay. Yeah. I mean, yeah, I can't believe he called. It's not like some Bitcoin guys like, we're going to $1 million without a date. He's like, we're going to $1 million in 90 days. I'm like,
Because
wow.
of hyperinflation and an economic collapse, bank collapse, all that. So like everybody's going to come out of the banks and all of a sudden start buying Bitcoin. So, I mean, there's people out there, probably the majority of the population still doesn't even know what it is, much less how to buy it and what to do with it once you get it. So,
yeah,
that's just an irresponsible narrative. Now, anything is possible,
yeah.
I mean, anything can happen, but that's not a very, likely, realistic possibility, nor is even hyperinflation in this country. That's not even a realistic.
Not in a 90-day window. No. The kindling's
ever.
Not there.
I don't know that that's even possible ever, because we are still the reserve currency of the world. We saw that with, the swap vehicle.
Yeah,
that they
just
created
last night, right? The swap lines, daily swaps. Yeah, exactly.
Why? Because everybody wants dollars,
Exactly.
So everybody still wants dollars. Everybody still wants U.S. debt. And, if inflation, it is, some of it has receded a little bit. The core stuff that matters to people, walk around every day is still out of control.
Still up, yeah. 5.3.
Some of the stuff has simmered down a little bit, and it potentially might be, plateauing. But if it all of a sudden shot up to 10 or 20%, the Fed's going to respond to that. They're not going to let hyperinflation happen, because then you're a third world country. And that just, that's just not something that is, I don't know how feasible that is. I mean, that's just, I just don't know. That's like saying we're going to get into a Great Depression. I just don't even know if that's possible anymore, given
with all the systems and back.
Yeah.
So let's go back to the Fed. So we both agree they're going to do a quarter. J-Pal and you talked this morning. That was cool. So that will take the terminal rate to, I guess it'll be 4.83, right? They kind of split the difference between 4.75 and 5.
Yeah.
Do you think the Fed continues to raise, or do you think they pause in May?
I think, they're going to be data dependent. They're going to wait and see. So if labor is still hot, inflation's still hot, if all of the indicators are still coming in hot, they're going to continue to hike. Okay. And they've said that. And that's going to be the key. So not the 25 basis points isn't the big thing that everybody's watching. They're going to watch, what is he going to say about future guidance? And he's going to say
exactly.
He's going to say data dependent. We're going to watch the data just like we are here. And he's going to say we have tools to deal with stress in the system. And he's going to reiterate what he said at the last meeting. I would rather risk over tightening because we have tools to deal with that versus not tightening enough, and inflation continues to run rampant. And then your narrative of, hyperinflation comes in. What does hyperinflation even mean? So when we talk about that, just understand that's where a loaf of bread goes to $100. That's where cars go to, well, cars are already 100,000. Maybe they go to 400. I don't know. Hyperinflation is 1,000% inflation, not just 10% or 20%. That's where stuff is really, really out of control.
I looked up hyperinflation one time because, again, people throw it around like it's candy. It's 20% or more a month. A month.
Yeah, you're talking Turkey, Venezuela, countries like that.
Yeah, it has happened. So so when you kind of play the cards out in your mind, can you foresee any rate cuts this year?
It doesn't seem likely with where inflation is. It just doesn't seem like you're going to be able to get inflation down anytime soon because of the job market. I mean, you need to put it in perspective. Yeah, we've had 300,000 jobs, maybe 400 lost in the tech sector, maybe 500.
Yeah.
You need millions, to correct what's going on, because you've already got several million vacancies as it is that need to be filled. So those have to go away before you start laying off. So you almost have to double that. You almost need, a net effect of about 4 million job cuts in order to reach net zero, to really affect what's causing and driving inflation at the retail level. So, unless we see inflation just really, really subside, I would think it's going to be very difficult for them to start cutting rates, unless the economy just comes to a dead halt. And the economy is still pretty hot.
Yeah. Yeah. You and I agree.
And the markets are up. Everything's giving them perfect ammunition to stay the course. And as long as it keeps doing that, they're going to stay at it.
Totally agree. Well, folks, in video number 3, we're going to talk about opportunity. Where's Greg looking? Where he's sniffing around? Where does he think might be a good place to look? But before we do, Greg, where can people find you?
Yeah, gregdickerson.com. That's where all my info lives. Go check it out.
Thank you, buddy.